Hi, if you're struggling with entries, I want you to watch this video till the end. I'm going to share with you an entry point and an exit point. A lot of people have been DMing me on TikTok, Instagram, and WhatsApp, saying they don't know how to enter the market. They know how to trade, but entry is the problem, and they keep losing or blowing their capital because they don't know where to enter and or how to exit. So today in this video, I'm going to show you one important number one entry secret that you need to have to make sure you don't blow your capital in the forex market. So let's get in the video. Hey guys, if you're struggling with entries, this video is for you. I'm doing this video because I've had so many come to my DM, my WhatsApp, Instagram, and TikTok asking about entry confirmations. A lot of you know how to trade, but entry and exit is the problem. If that's your issue, this is your video. I'm going to show you something called a swing high and a swing low, and I'm going to show you how to confirm entries. And mostly, I use this confirmation on gold only. If you notice in this chart, we're having a bearish trend, and this is a bearish trend. We notice this. This is the trend is moving towards the downside. This is a bearish trend, and we keep breaking structures, going lower, and we know when we're having a downtrend, we need to have two or more lows to confirm the downtrend. So if you count here, you have 1, 2, and 3. In this scenario, you see breaks of structure to the downside, okay? And then we have this one break of structure to the upside. We have this one break of structure to the upside. You see, I've marked my zone here. This zone around here is what we call, is where we enter from. This is our point of interest. A lot of people speak about point of interest. This is our point of interest. And this strategy is usually used by people trading the break and retest strategy. Understand? The break and retest guy used this strategy. When the market breaks this high, it came and retested the same level that broke the same high that was broken to make sure it's a very solid level to become a support. It was previously a resistance, now it is a support. If the market breaks this level and come and retested it like this to continue bullish, this means this now becomes a very strong support to support the market to go upside. Okay, now, okay, when the market comes here to this point of interest, it moves aggressively and break this structure right here. Breaking this structure means it has violated this high. This means that these buyers were they had momentum and power to push and breaking this high. Remember, I told you lows and highs are very protected. So they came, pushed, and broke this high right here. So this means here they left an imbalance around here. What do we do? An imbalance or a fair value gap is what is where we put our entries. Okay. Now, what we do, we take our rectangle and put, let's say, between where this a fair value gap, we put our our right there. We put our rectangle right there to do what? To mark the fair value gap. And if you see on this my rectangle here, we have a line in between giving us a 50% of that rectangle. This line in between here is our entry. And how do we get this entry? We get this entry using a swing low or a swing high. Okay, this is what I mean. You see these three candles here. We have 1, 2, and 3. The middle candle has a wick. It must have a wick, a long wick. This wick means it came to mitigate the imbalance that was left by buyers when they moved to break this high. So we mark the 50%, and then we wait for these three candles to be formed. Okay, these three candles to be formed. I think people call them three soldiers. We wait for these three soldiers to come. Okay, once these three soldiers come, the middle candle will have a wick. This week will come to mitigate the imbalance that was created when the market was buying aggressively. When you see these three soldiers coming, now you get your entries, your long positions, and put them above, you see, above this third candle, and your stop loss should be below that wick, below the wick that was formed by the third or the middle candle, and your take profit should be on the high. This will also be a point of interest. This is where this should also be the supply where the market came from. See this one? This should also be the supply where the market came from. So when you enter here, make sure your entry is gonna be on the supply where the market came from. Let's get on the charts now, and let me give you an example on this chart now. Okay, so we have we have this level here as our high. This level here, okay, this level was our high here, where the market came and violated this level, broke it, gave us a change of character. Now what happens? We need now to have a fair value gap from this. You see this aggressive buys that broke this high. We need to have an imbalance right below. You can have it as this one here, okay, and we also have another one, this level right here. We also have this level right there, okay. So I want us to look to see and see if you get the three soldiers or the swing lows. Now this is the three soldiers that I'm talking about, okay. So how do we see it? How do we see these three soldiers that I'm talking about? You see, we have this one candle here, second candle here, third candle here. We have our three soldiers right here. You understand? We have our three soldiers right here. We have our first one. This is our first candle right here. Okay, this is our second candle right here. Okay, and this right now is our third soldier right here. Okay, that's our third soldier right there. Okay, now this being our level, our entry confirmation, we need to see these things here for us to confirm our entries. I hope you're getting it. You need to see these things here for us to confirm our entries. And the middle candle must have a very long wick to come and mitigate the imbalance that was left when the market bought aggressively. So what happens when we see something like this? For our longs, we enter on that candle break right here. You see? And that our stop loss should come below this wick right here. Okay? Below this wick right here. Okay, risking 50 pips, and then for our entries we should go to the next high. We risk 50 pips to get 180 pips. Are we together?